item number 11. And Kevin.
I'll move this, Madam Chair.
Auckland Council Performance Report.
Got a question?
I'll second it, Madam Chair.
You can move it, thank
Second,
you.
you second it.
Can we have the presentation before we... I think it's probably quite important. Thank you.
Good morning, councillors. We've got a brief presentation to take you through the performance report for the half year. The results we're presenting here are for the Auckland Council parent, and they are unaudited results. The group financial results will be presented next month when they go through when they've completed the audit review process. Just a summary of what's in the report for you. There's highlights and achievements for the last quarter. We've got performance measure results, financial performance results. There's a number of appendices into the report. There's some KPI information, economic data, a treasury report, professional services information, Lagoima information, customer service results, and some debtors management information for you. The next slide provides a bit of an overview as to the growth indicators that we've seen in the city. The first slide there shows the continuing trend of immigration into Auckland. We've got, for the December year end, we had 30,000 new immigrants moving into Auckland. That's that blue line you can see in that top graph. And that's a 30% increase from the prior year. The second graph down there shows you the trend in our building control services team, where they're seeing strong demand for their services. And the number of new dwellings consented in the last year is just over 9,000 new dwellings, 21% increase on the prior year. The report also includes some information from the building control team, where they're showing that the number of lodged building consents has increased by 15% in the last quarter compared to the previous financial year. So there's real strong growth and demand for services there. And the team do have a number of initiatives underway to deal with that growth. So moving on to a summary of the performance measure results for the half year. The first graph there on the left-hand side is a reminder about how our performance measures have changed in the new financial year. We've got a big drop down with 50% less performance measures that we're now reporting on. And there are a bunch of new performance measures there. So we do have an internal audit program underway at the moment that's reviewing our processes and systems across those KPIs. And that's in preparation for our year-end annual report and external audit. The graphs on the right-hand side give you some of the information that we've got in the detailed section of the report. We're presenting for the first time year-end outlook on our performance measures, so that you're getting an early heads up as to where we expect to land for year-end and how we're tracking during the year around our targeted service levels. We have reported on 57% of our performance measure results for this half year. The balance of the measures we'll expect only to report on at the end of the year. A big chunk of them, about 31%, are all related to annual surveys, so we only get those results at the end of the year. There is some work underway to move some of those surveys to quarterly so that we get more regular feedback as to how we're progressing. Okay, so moving on to the next slide, just an overview as to how we've done for the half year in our service delivery. So the big green slice in the graph there, 68% of our performance measures, we have achieved the targeted service level, so that's a good solid result. And the orange piece there, 10% of the KPIs, we've substantially achieved our targeted level, so we're just a few percentage points away from the targeted level. The other 22%, we haven't achieved the targeted level. And those are largely in the regulatory space, where there are some challenges around growth and demand for service delivery. The report does have information and commentary from business units around initiatives that they've got underway to improve performance in those areas. So if we jump across to the next slide, capital investment and debt management. So for the half year, we have completed $175 million of capital investment. The full program approved by the council for the year was $578 million, and we're not expecting to complete that full program for the year. There will be some slippage with some projects being completed in the next financial year. Debt management, year-to-date, at the end of December, we're at $6.8 billion, and we're on track and in line with our forecast debt levels as per the LTP. Financial performance results are summarised in the next slide. I won't go through all the detail there. Just to summarise, bottom line there, year-to-date December results, we are $58 million unfavourable compared to budget. And if we split that up between our operating results and non-operating results, that grey line there in the middle is our operating result, and you can see that's nice and green. There's a $6 million favourable variance to budget, so those items above in the operating space are on track. In the non-operating space, there's a $64 million unfavourable variance to budget, and that relates to our fair value of treasury derivatives, and these are the accounting non-cash adjustments that we do each month end in relation to those treasury derivatives. They are an important part of our treasury management practices, the derivatives, in that they provide us certainty around our future interest rate costs of debt. So they are an important part of our practices. And just a reminder that that adjustment there is non-cash. It's an accounting entry that happens each month. Okay, so to summarise, overall we're reporting that we do have no areas of material concern for the half-year results. The performance measure results are largely on track, with some areas working to improve their performance. The operational financial performance results are also on track, and we're showing a result there that's better than budget by $6 million. Capital investment program, we've completed $175 million to date, and there are some project delays that we're anticipating for the year end. And also finally, the debt levels at $6.8 billion are aligning to LTP forecasts. Thank you. We'll take any questions.
Thank you. Councillor Cooper.
Thank you. Just got a couple of questions. One is around the community facility use. If we're looking at, you've got percentage of community facilities used for health and wellbeing, how do you measure that it's not health and wellbeing? I mean,
there is a detailed definition that sits behind this KPI, and they've defined all sorts of different activities like yoga and so on that would fall within that definition. So I understand they use that definition as a guidance.
and the other questions are around, of course, the resource consenting applications in terms of, do you know what the obstacles are to achieve, especially the percentage of notified resource consent applications? We've got high targets, and I'm imagining it's because we're legislated that we've got to have 100% compliance, but it's not looking that healthy, is it? Do we know what the obstacles are, and are there things in place to deal with that?
Yes, I understand that it's just a small number of consents that go into this category, and they are really complex.
That's why it looks like high numbers, but it's actually, I mean, high percentages, but it's not actually such high numbers. Because I know, sometimes, often it's just, we're not getting the information that we need. I know of one that's been held up for over a year, just waiting for information. So is that the kind of issues they're dealing with, or is it something in our resources that we don't have? I suppose that's what I'm trying to ask. I couldn't really.
Yeah, look, I mean, the specific examples, I can't actually quote what those are, but quite often what it is quite complex resource consent cases, so actually you've talked about, where it actually takes a bit of pushing back and forward to actually ensure you've got all the information required to actually respond to that consent application.
And does the clock stop, though, when we're not getting information? So I would have thought then if it was really complex and you're waiting for information, you wouldn't be counting the days then. I thought you stopped the clock, or the clock was stopped, if you're waiting on an applicant. Or is this too complex for you guys and it needs to be talked to the resource consent people?
Dino would comment. We are measuring both sorts though, where we do stop the clock, but also there's a general feel that we actually need to start measuring about the response times, including stopping.
Yes, sorry. So there's two things that we want to measure. One is the statutory days. So we stop the clock when we're waiting for information, don't receive it, and ensure that it's adequate. So that's the statutory day clock. The other thing that we are introducing, and we've agreed with the Auditor General after their last review was that we also want to measure elapsed time, so that we're seeing where things get caught in the system and we're measuring calendar days, because that's also an important feedback loop for us. So we're improving the latter, but certainly we want to measure both for the benefit of the applicant and council in terms of processing those applications.
Thank you, and I think, Madam Chair, that speaks to perception, because people go out there and say, oh, I've been waiting this long, but it's often the ball's been in their court, but the perception is that we're holding it up. So I think that's, and then other times it's not, so I think it's interesting to measure, it is useful to measure both, and a portion, I think, this was, you know, well, 20% of that time was spent, you know, applicant waiting on those calendar days, or it was our hold up or not. I think that's really important.
So
to get
the
facts.
challenges that we're facing in terms of volume is that the volume's increasing.
Yeah.
We've talked about this a few times. Volumes are increasing. We've got an ageing workforce, and we are competing for good resource. So we've got all those things going on at the same time. We understand that, though. That's not an excuse. Those are just the factors that we're dealing with, and that's why there's a bit of pressure sometimes on those percentage targets being achieved.
Can I just ask, so if that's, we say we're competing for the resource and there's not enough people training, does that mean that the private sector are paying more?
Right, that's correct.
Look, I mean, the resource demand is into the private sector, but it's also amongst other local authorities in New Zealand. They're looking for resource. We've got a...
We train them well.
You know, we're quite proud. The team have got the best training program
Yeah.
in New Zealand. So we produce high quality building control officers. That's a very good thing. We're looking to open it up for other authorities to send their staff to train, to take the pressure off in an NZ Inc. perspective. But, you know, that's our current situation.
Thank you.
Move to
Thank you, Madam
Tauranga
Chair.
because it's cheaper to live.
Yeah, exactly. They can get a
Councillor
cheaper
Clone.
house too.
Yeah, the capital investment program, can you just explain to us again what projects and why? And we did have a bit of a goal to try and not have that underspend occur, so we were kind of not going to budget if we couldn't deliver, so, but it seems to have gone back quite badly this year.
I feel like that's a question for me, Councillor Clow.
Yes.
So we're still targeting that 80+%. Where we're at is less than what we expected to be, but there's a big focus on delivering on our capital program. In the past, we have been in the order of 60 to 65% of our budget, so we will beat that this year. Will we be at our target range of 90, 95%? No, we won't. But we're doing everything we can to push that up.
And the delays are on what capital projects may need, indeed?
Jenny, looks like she wants to say something.
On page 45 of the report at the top there's a couple of projects that are mentioned. There's, in the community facilities area, Uxbridge Arts Centre, Albany Community Hub, Hobsonville Community House, and some land acquisition. So there's some projects. Also the commercial property portfolio, some of the strategic development work, the timing of that's uncertain. So those ones identified.
Thank you.
Thank you. Councillor Filipana.
Thank you, Chair. Did we, and it may be a question as well through you, Chair, did we come to a resolution around the Lagoima as to how many elected members asked for Lagoima? I don't know whether we've come to, whether we came to some resolution around that?
Zero, we get refused.
We were going to
Oh,
break
which is
it down.
good.
You were
But
going to try and break
just
it
the
down,
cost
Kevin,
with the
weren't
money.
you?
Yeah, I just wanted to get the resolution, that's all. Kevin?
Yeah, no, we haven't got information here. Look,
Okay.
the fundamental notion is, though, that we'd expect there wouldn't be Lagoima requests. It's actually, if it's part of your role, then that's part of the functioning of how we operate, so we should provide that information.
That's what
That's the intention, so it should
yeah.
be zero anyway, but yeah, we can still confirm what the
Okay.
number is there.
Okay, and just on page 67 around debtors summary information, what process have we got sort of in place to recover these? I mean, I know there's one particular case that's happening now, but I mean, that's quite a bit of money, even with our contributions, development contributions, I mean, at 64%, 81.3 million. We've got 46.6 million around rates debt. So what process have we got in regards to the recovery of?
Okay, yeah, well, first up, rating is very